So I'm going to take you through Solexel. Solexel is a very compelling company in the solar space. Solar market is a pretty difficult market today, but Solexel is uniquely positioned to win in this market. And I'll talk to you more about that in the next 15 minutes. So if you look at the solar market today, there's really two sides of it. You'll see the low-cost thin film products. They tend to be very low efficiency and have a very low price. That's companies like First Solar on one side. On the opposite extreme, you've got SunPower. They've got some of the highest efficiency panels in the world at 20%. But they're very expensive, but they get a very nice premium for what they do. What's interesting about Solexel is the best of both worlds. It's a high efficiency monocrystalline silicon panel, but it's done at thin film level costs. Very low cost, down to 42 cents a watt, and we deliver a unique high energy yield. So if you take a look at the overall PV landscape today, 87% of PV is crystalline silicon. It dominates the industry, and most of it's now produced in China. You look at it, about 50% of the cost and 70% of the CapEx is in processing the silicon itself. Costs have come down a lot, down to about 80 cents a watt, and as you look out in time, they'll continue to come down, but it's reaching an asymptote at about 65 cents a watt. What Solexel does is it eliminates the most costly steps in the process. It takes out from this inefficient process, it takes out the poly plants, the growing of ingots, and the wafering functions, and it replaces that with thin silicon growth, all done right inside of our cell process line. It's still very high quality monocrystalline silicon, but we use 15 times less of it. 2 to 3x less CapEx, so 65 cents a watt to scale it from a CapEx perspective versus as much as $2.50 a watt, and half the energy to produce it. So more on the order of where thin film uses for energy, and about half of what a poly plant is running today. And with all that, we deliver superior performance, 20% higher efficiency for our product, and get it down to that 42 cents a watt. So let me talk a little bit about how we go about, how do we do this. So in order to make a monocrystalline silicon, you really need to start with a silicon seed. That's why they do this inside of growing ingots. You put a seed in and grow the ingot. We start with a template. Basically, it's about a millimeter thick monocrystalline template. It's inexpensive. And what we do is we start with that and we buy these. We're going to grow our thin silicon on this template and use it over and over again. Our first operation is a porous silicon operation. This is something that's been around in the MEMS industry, in the semiconductor business for about 30 years. Of course, they do it at one wafer at a time. We created a tool that does this at about 640 wafers an hour, and with Dynapon Screen, the world's largest wet semiconductor tool manufacturer. It's one of a kind, and we're the only guy who makes it for the next 8 years. So this becomes our seed layer and release layer for growing our thin silicon. So the next step, we actually do a chemical vapor deposition process. And we use trichlorosilane gas. This is the same feedstock gas, very inexpensive. It's used in a standard poly plant. Not using expensive gases here. And so we grow about 30 microns of silicon on top of that porous silicon layer. So that's the thickness of our cell. This is where we're saving that. Very high quality. And now we've got this nice carrier that can go through standard processing, standard tools of silicon with a thin silicon sheet attached to it. Same coefficient of expansion and that to be able to go through our process, the perfect carrier. We've created a very inexpensive back contact cell process to build our cell. So the back of the cell is up and we build the cell from the back. It's all dry. And we use picosecond lasers, similar lasers to what might be used in LASIK surgery on your eye. We use them to do cold ablation. A normal process here to create a back contact cell would be lithography. Very expensive with consumables. We have no consumables in this process. It's actually cheaper than what's being done in China today at a front contact cell. It's far less efficient. So once we've created the cell, we have a rule within Solexel. We never handle this 30 microns of silicon we always have it carried through the process. And that's why today, in our pilot fab, we're at 98.6% mechanical yields. So we attach a piece of pre-preg to the back. This is the center layer of a printed circuit board. Used on every printed circuit board, comes in large rolls. We've adapted it for our function. And it's going to be the carrier for our cell. And we release it. We recycle the template, and we send it back. And we finish the metallization and build it into a cell, into a module, similar to how modules are built today. It turns out to be a flexible cell. There's no bus bars or fingers on the front. The only example of something like this is through Sun Power, and they have a smaller version of this. It's very expensive. Ours is the largest back contact cells in existence today, and are high efficiency. We partnered with Jabil, the world's largest contract manufacturer for modules. They have about a gigawatt of production to build the module side of this for us. We do the cells. Great supply chain there in order to be able to get low-cost glass Templar. So when you look at it, it's a multi-dimensional value proposition. You've got achieving world record efficiencies on thin silicon. No one on Earth has ever done 19.4% efficiency on 30 microns of silicon. The previous record at IMEC is about a 17% cell, about the size of a quarter, and done on 50 microns. So we're doing full-size cells, hundreds a week at this point in our process in Milpitas, California. We've achieved 50 reuses. We reuse this template over and over all the time. We lose about 6 microns of thickness of that template every time it goes through, and eventually we recycle those back through the ingot program. We've passed our initial reliability testing. That's going very well. We have an interesting capability. Since we have a pre-preg layer, which is basically a printed circuit board layer at the back of our cell, we have the ability to be able to put shape management into it on a cell level. So a normal module loses a large amount of power when a single shell is cell shaped, actually a third of the power. With Solexel, we lose 1 cell's worth of power whenever it's shaded, so it really works well in an environment where you can see shading, like in a residential environment. From an operating condition in terms of one of the issues in solar is that as you put it in a hot environment, the efficiency actually drops. We operate in some of the best ways around this because we operate cooler with this thin silicon, and we have the lowest temperature coefficient of any silicon cell out there. So a little bit about the company. We were incorporated in 2007. We have a fully operational cell pilot fab in Milpitas, California. 70 employees, 45% with advanced degrees, a great team. We've got 130 patents written around this technology, 30 of which we've licensed from places like IMEC, UC Berkeley, and Max Planck. We've been awarded $17 million in grants today from the Department of Energy. We've collected about $4 million in that. In the latest Sunshot program, we picked up $13 million with our partner Owens Corning. Owens Corning is the North America's largest roofing manufacturer for shingles. And they went around and looked at all the different solar companies, came back and exclusively partnered with Solexel in order to do a solar shingle. And the DOE awarded us a $13 million grant to go get that done. We've got strong support from Malaysia. Our plan is to put manufacturing in Malaysia. We actually have signed with the Senai High-Tech Park up here in the Johor region, right across the ridge. I've spent a lot of time over the years in Singapore, and the Malaysian government's been helping us a lot with this. We're very happy and excited about working with them. Today, we raised $113 million. The last round was in 2008. We are now raising a $60 million round. We've completed $37 million of that, and that's in the bank today. Last week, I got another $10 million term sheet, so that's going well. We picked up and worked hard on this, a strategic investment from Sun Power. So this is the first time Sun Power has invested in a startup, and they came in with both their due diligence team and Total, who owns 66% of Sun Power, came in with their due diligence team and spent an incredible amount of time going through all the costs, the efficiency plans to ensure it was right, and then they invested. And that's given us a lot of traction with this round now in terms of getting it closed, and we're planning on closing the rest of the round for the remainder at the end of July. A little bit about the team. So you talked about me. My background's been in disk drives for 29 years, a long time. Had 2 factories here in Singapore. Also had a factory up in Suzhou, China that I started up. Large company, $4 billion in revenue, and sold that to Seagate after us. Once I joined, about 6x stock improvements, so it worked out really well. Our founder is Mehrdad Moslehi. He's a 20-year consulting professor out of Stanford. He went to TI, was one of the 4 most prolific inventors in TI's history. Over 220 patents. He's a real inventor. He's had 2 successful startups. CDC, which is a semiconductor equipment manufacturer that went through IPO and M&A, and then another company as well that he successfully grew and sold. Jonathan Michael comes to us as our CFO, a great background, a Fairchild in semiconductor and low cost, and then Mark Kirstens, who's with me here today, is our energy guy. He came out of BP. He ran all the sales, marketing, and project development for BP Solar. $800 million business. He had 220 people worldwide. He's really done a great job of connecting us with all the customers. So if you look at the solar market in terms of a go-to-market plan, it's a tough business for thin film level companies. It really is. If you're a thin film level company with low efficiency, you've got to go out and be bankable to sell into utilities. To be bankable, you need to put a big field in place. So about 2 years watching it while you're burning OpEx. And then once you do that, you get the right to sell it at below First Solar prices when you're not at scale yet. And that's a tough environment. That's why people struggle so hard. Solexel is completely different. We partnered with 9 top companies. We went after top distributors and developers, partnered with them. We signed MOUs around with these customers. They're all planning on, they value the company because you're delivering high efficiency, you're delivering that high efficiency with shape management and all-black design, and it's uniquely set up to go very well into the distributor market for residential. So we can start there and start selling directly into residential at a premium. You can't get this product from anyone else. The closest they can get it is from SunPower, and yet SunPower doesn't sell to distributors. They go directly to their own installers and sell to their own developer. So a great spot to start, allows us to sell. You don't need to be bankable in order to be able to sell. There's less bankability requirements selling into the residential market, especially in Europe. The next step is going to commercial rooftop. We've partnered with a set of great developers here, some of the best and the largest in the industry. Here, when you go in, you need to be bankable. So what the developers have done for us is they're going to use us against the equity portion versus the debt portion on roofs. And they'll use other manufacturers for a portion. So we instantly get traction into these commercial rooftops, working with our partners. And that allows us to then go into the ground mount applications with those same set of developers. And last but not least, our solar shingle project with Owens Corning for North America. Why would Owens Corning pick us? Well, all black, high efficiency. It's a flexible, pliable cell. That's very useful. So you stand on it, you don't break like crystal and silicon. It snaps very easily. And the anti-shading technology, very important. So if you look at our timeline going forward, we're building hundreds of cells a week in our development process. We're at that 19.4% efficiency. We plan on being at 21% efficiency on a back contact cell when we go into volume at the end of 2013. We'll be building our greenfield site here later this year and breaking ground in Malaysia for that. We've been going through qualifications. The testing has been going very well, and we'll continue that through the year using Jabil's resources. Our customers are all installing demo systems on their dime so that we can get early looks at this, so that when we start into production at the end of 2013 in volume in Malaysia, that we've got that qualified. And then we scale into 2013. Very profitable on our first line at 200 megawatts in 2014. So if you look at the industry today, It's a tough place, right? You've got 80 cents a watt, a couple cents a margin if you're lucky. That's going to go down, and it's going to continue to be tough from a margin perspective if you're doing everything the same. And that's what most of these companies all look the same. But then you look at Solexel. Cut the cost of silicon. It drops your cost. Your profit goes up. You reduce the amount of capex. You reduce the amount of energy to produce it. You improve the efficiency, reducing the cost and increasing the premium that you get. And then you add the shape management, and all of a sudden you've taken this market that's a 65% growth market over the last 6 or 7 years. And you're growing that in a very profitable business. And that's why we're excited about it. So to wrap up, we have industry-leading cost of electricity, record levels of efficiency that have never been done before on thin silicon, higher energy yield with our smart cell technology and anti-shading, and superior aesthetics. It's an all-black module, and all that gives you a premium price. You're dealing with crystalline silicon here that's been proven. So there's no novel materials, proven and reliable. Just dramatically less silicon, capex, and energy to get you down to that 42 cents a watt. It's an extendable technology. I didn't talk about it, but the ability we've completely decoupled the size of the cell, so we can go to larger cells, similar to what the semiconductor industry has done to lower their cost. Very well protected because of the 130 patents and the 2 unique tools that are only given access to Solexel. The rest being standard tools off the shelf in the crystalline silicon space. And this is our last equity round as we go out and grow our factory to profitable quickly. So it's a great opportunity for returns in the solar market to be competitive, to be very out there and win against these giants. So, thank you.